And this is a stock that was a $22, $23 stock a few months ago before a very, very minor earnings miss, which almost cut the stock in half to kind of those crazy, stupid levels that I said, hey, this is like very, very attractive valuation, huge discount, blah, blah, blah. So, we will talk a lot about this, but I guess the only thing I'm going to pound my chest on now is that I think it's a buy. In fact, I think you can buy either name because essentially it's a merger equals. They're tying up. So from current prices, both stocks probably will go up the same amount since it's it's an all stock merger of equals type deal. I don't know. I guess if I buy them, I'll probably buy Cloudera, just because that's going to end up being the parent. But yeah, it's if anything, really the stock. I want to say they were up 23 to 25% in after hours last night. That's really, I think that's really more where where both should be trading. This big fade, this big raid, I think is probably people massively VWAPing into the stock. Obviously big money guys trying to buy at a better price and trying to execute big VWAP orders, and I think that we'll see. So I'll answer any questions. I guess my first conclusion, though, and which is what I posted, is it's basically a Hadoop monopoly now, and I think this deal will serve to close the gap, the valuation gap, more quickly than would have kind of occurred otherwise. Otherwise, you would have had both companies would have a string of earnings beats, but there's huge upside in this combined entity now. And the upside just has to be, basically, it just has to trade at the same valuation of plenty of other companies that have lower growth than they do.
All right. So what, if anything, have you done in this outside? I know you're considering adding to Cloudera, but did you take profits in Hortonworks yet?
I didn't, because I was thinking about doing it after hours last night. I sort of thought about it. But again, the stocks are up 20-25%. I pretty much think both companies will double from kind of the pre-M&A prices. So, if I think there's 50, 75, 100% upside from the pre-M&A prices and they're up 20-25%, I don't know. I don't really have. I think I was thinking about selling, like, Hortonworks at 26.50, 27. I might have let 25% of the position go, but no, it ended up. I thought it might do a bigger pop. I thought it might have a slightly bigger pop on the open. I pretty much figured they would rate it, and again, I think the ratings so people can buy it. People can get in there. But again, you can value this entity to valuations now very much on par with the companies I put in my note this morning, and we'll see what happens. It's not going to be an instantaneous thing, but this could be pretty interesting. And it's not beyond the scope of possibility that somebody now may just say, well, Jesus, how big of a threat is this combined entity to me? Meaning, if you're a big data player in the space, big software data management vendor, you might kind of now be way, way more worried about future competition with the combined entity than you were with either of the companies on a standalone basis. So, if you're a Splunk, Tableau, Oracle, SAP, on and on, various names like that. I'm missing one of the big data names. You might almost at some point you almost might think you have to buy these guys, lest they take a bunch of your market share away. And just so people know, this is the database tool that sits on a ton of AWS, Google Cloud, probably Azure. There's these guys power the database engines of a lot of these applications that sit on these huge cloud-based networks. So this will be very interesting over time. But again, I think this deal. This is the thing that I'm the most surprised about. You can probably tell. I just never thought these two companies would combine. I thought they'd kind of spend the next 3, 4, 5 years beating each other up. and maybe one of them succumbs to an M&A deal, which means maybe both of them eventually have to succumb to an M&A deal. And then, I kind of envisioned, okay, so XYZ buys Hortonworks and XYZ2 buys Cloudera, and maybe a CRM ends up with one, maybe an Amazon ends up with the other, or maybe a Splunk ends up with one and Tableau ends up with the other. I honestly never thought these two companies would merge. I think it's an absolutely brilliant strategic move on their part.
All right, so not doing anything in either of these names right now, considering actually maybe adding to Cloudera. Let's take a look at that.
Yeah, if Cloudera drops 50, 60 cents, I'll buy more of it.
All right,
or really either name could, but I just think I'm going to buy Cloudera because it's slightly cheaper per share. I think both stocks will track now pretty much evenly. And if I'm going to buy one, I'm probably going to buy the parent. So
yeah, and that makes total sense.
Yep.
All right, so it's currently trading around $19. So you'd be interested around $18.50, $18.
Yeah. I mean, I hope it goes there. I hope it goes there in the next hour. I'm buying more, and then, hey, if for whatever reason it keeps dropping, I'll keep adding to it. Again, this could end up becoming kind of one of my larger positions. I think combined, it's a decent position. If I add my Cloudera and my Hortonworks combined, it's not a bad position, but I never really, I never really put these out there. Now they're both on my focus list, of course, but I never really kind of said, "Hey, these are my," I didn't view either of these positions as I viewed like a PayPal or a Qualcomm or a Twitter or my fiber optics bet or anything like that. But yeah, this combined entity definitely elevates my view of kind of where this can trade.
Okay. Are there any other M&A specs that you have on your radar? This one came to fruition. Any others?
I have to think about it. And this one is so good. I almost don't really. I'm less worried about kind of hunting for other M&A at the moment, because I mean, if Cloudera was or let's say Hortonworks was 33. I might be more inclined to take some off and wait for dust to settle and stuff, but or 35. But I don't know. I mean, it's like it's sort of like when you're looking. Hey, I can find something really cheap, but let's say a company just had a really good earnings report and it spiked pretty good, but it's now only up 8%, and the earnings report was really, really good. So even though there's like 3 or 4 companies I could buy that have earnings reports in 1 or 2 or 3 weeks, and I really am attracted to them. But if company A just had a report, it was awesome. So now the risk is behind me. The known information is super good, and the market's giving it to me at not much of a higher price. I might just go with stock A. And then this is kind of like it's like now I'm until these stocks trade way higher, I almost don't really care. I'm like on the hunt for M&A. On other things. Just so you know, I mean, a lot of my companies get bought out. My method produces a lot of my companies get bought out after they start going up again. That just kind of it just seems to be a natural occurrence with kind of where I hunt. But like I say, this is just, I don't know. I mean, this could be a really nice theme for a long period of time. I'm trying to think of a deal that went through that I thought was as good as this deal. And most M&A deals are basically poor, statistically too. But for the buyer, most M&A deals are generally poor, and they either take a long time to work, or they have to digest the amount they overpaid, or X whatever. This is just not a poor deal at all. This is this would probably be akin to. This would probably be akin to eBay buying PayPal out many years ago. That ended up being a brilliant deal. I don't know. I'd have to go back and really think about M&A deals that at first blush I liked as much as this one. FireEye had interesting news. I mean, Goldman Sachs, did they upgrade them or did they just raise their price target on them?
I'm not so sure they did either. I think they had some positive commentary. Let me double check and see what it was on
Or maybe they
FireEye.
just reiterated their view. But put it this way, I never heard Goldman say that they thought FireEye could double on just a little bit of an increase in market share. I mean that, I guess if I had to say of all my coverage stocks I follow, especially what in my focus list could possibly be an acquisition target, FireEye probably moves up the list pretty good.
Okay, yeah, and that makes sense.
Yeah, that would probably be the next closest one. Although I don't know. I don't really think. Again, I would see FireEye more like if FireEye goes to 30, then I think you start getting more M&A rumblings on it.
Mm-hmm.
I mean, Tableau software could get bought. I mean, that might sound like an odd one because the stock's gone up 2.5 times off of lows. But again, that's where companies get interested in other companies. Their subscription revenue is way higher now, way higher percentage now than it used to be. The business looks like it's on a much more solid footing than it used to be. They kind of recovered from that big kind of that 2 quarter earnings debacle. But yeah, I mean, I don't know. I mean, we're in a market. A lot of stocks have a lot of currency because their stock prices are high, and even though Tableau is a high price stock, the market cap is not that huge, especially for the revenue. That's another one that doesn't trade at a super high premium or anything. In fact, Tableau kind of trades, in my view, kind of where it should. They're about 8.5, 9 times sales for the growth that they produce. I mean, that's sort of right where they should be. They're very much, I would call them very rationally valued in the current market, where a lot of stuff is irrationally valued. So there's definitely room. I mean, if somebody wanted to come along and pay, 10.5, 11 times forward sales, I mean, that would probably be, I'm just kind of ballparking this, but that would probably be like a 30, 35, 40% premium to Tableau's current price. So, I mean, we're in a market where, as these other companies' stock prices just keep going higher, they have a lot more currency to do deals. And that would be a good bolt-on acquisition for somebody. It's this is an $8.5, $9 billion company. So you again put 30, 40% premium. It's a big deal, but it's not massive. It'd be like an $11 billion deal, something like that.
Why wouldn't another company find Hortonworks attractive and also kind of shake up the landscape, so that the competitive landscape a little bit, so that it's not so dominant?
Well, that's a good question. I mean, if let's say I'm Microsoft, okay. Now Microsoft really never does this because they're more likely to do this now with the current CEO who's just way better than Steve Ballmer. But if I'm Microsoft and I'm looking at this, because what has made Microsoft pretty much double? It's pretty much been kind of, hey, they're one of these cloud names too. Hey, they've got a subscription revenue stream too. Hey, they've got Azure too. You know what I mean? It's sort of like, and they have big businesses in this stuff. Oh, yeah, Microsoft has a database engine too. Now, I would kind of argue all of their solutions are fine, but I don't know if they're the best solution in the group. But they're very good solutions for the money. And what does Microsoft have? What's their huge strategic advantage? Is they're embedded everywhere, right? Mm-hmm. So they're embedded everywhere. So they've got customers that they can sell and cross-sell all these other products that they bring into their suite of products, right? So anybody that they M&A, they could basically instantly start selling that company's product to their whole customer list. And Microsoft basically has a bigger customer list than any company in the world. So I'm talking from a software standpoint. So, I mean, if I'm Microsoft, I probably look at this deal and I probably, I don't have the warm and fuzzies about it because, this could be a pretty big threat. I mean, they've got a big arm, a huge client base that uses their products instead of Hadoop type stuff. And, the Hortonworks / Cloudera solution's a lot cheaper. Some would argue it's quite a bit better. So yeah, I mean, if I'm Microsoft, maybe I don't want these two companies to combine. If I'm saying, I don't think CRM would care, because CRM, provides building blocks to allow these things to work. I don't think Amazon cares, because again, these two companies are huge applications on AWS. Again, I don't think Google cares. These companies are huge applications. I should say these companies' products are huge applications on the Google Cloud. But, I mean, pretty much anybody who is a large Oracle, Microsoft, again, maybe CRM, SAP, IBM, and any of those companies, I can't believe they would look at this deal and think it's good for them at all. So yeah, maybe. I mean, if you're Microsoft, you want to step in and say, oh, look, maybe should we buy one of these guys so they don't merge together? Maybe. We'll see. I mean, here's the biggest thing is, I mean, Hortonworks is agreeing to this deal because, it's basically a merger of friendlies, a merger of equals. So the premium is not big because they're part of the combined company. Mm-hmm. They'll benefit, but yeah, I mean, if somebody else were to come in and say, okay, hey, I'm gonna mess up this deal, I'm gonna buy one of these two companies, they'd have to pay a much higher premium. I mean, they'd have to buy Hortonworks for something like 35 or 40, I think, to get a deal done versus this deal.
Yeah, I guess if you were to handicap something like that, what would you give those odds?
I think pretty low because I think Cloudera and Hortonworks know that this is a really good deal, so they're going to angle and vote for the deal that they've got on the table. So somebody would basically have to almost force the deal, right? It'd have to be a hostile bid, a hostile takeover. I mean, those things can happen. What's really interesting, we haven't really seen much hostile activity for a long period of time. I don't know. I put it this way: it's a high enough probability. I'd say it's at least 10-15%. I wouldn't put it as high. I wouldn't put it at 25% though. Again, I think this deal goes. I think Hortonworks and I think Cloudera combined. I think the two stocks will be way higher in 2, 3, 4, 5 quarters. And I think this will end up being a much bigger company in the future. 3, 5, 10 years down the road, it could be huge. So we'll see what happens. I mean, somebody could come in, somebody could kind of try to mess this deal up by doing a hostile. If I were doing a hostile, I would probably go after Hortonworks, personally. Let me just look at my spreadsheet. I mean, we're talking about Hortonworks as it is right now. On out year sales, I mean, this thing's not even 5 times out year, and you're talking about a company that's got higher growth rate than about 85% of its cloud software peers. So like I put in my note, I mean, data is a great example. Data is not overvalued. It's sort of in my valuation work, meaning kind of where I think things should trade. There's a lot of things trading way above where I think they should trade, but I think data is trading about where they should be given their growth and place in the marketplace and stuff. And adjusted for growth, Hortonworks trades at almost a 50% discount to Tableau. I mean, that's just a massive discount for a company that's growing faster than Tableau, and arguably has a multi-year runway that's just as good, if not better. So and Cloudera is very similar discount too. But yeah, I mean, these companies, I mean, there's a lot of things we see that don't make sense. The valuation of Cloudera and Hortonworks to me didn't make sense before this deal. Now it just makes less sense, or now it's only they're only up about 12%. So when they were up 20-25%, I'm like, okay, well, they just closed the valuation gap by a quarter, right? The valuation cap's a double roughly. So hey, they closed it by a quarter, so 3/4 of the valuation gap to go. Now it's they're only up 12-13%. Like I say, that's why I'm thinking about buying more.
All right, very interesting. I think we've covered most everything that I can think of regarding that merger. I was looking through some of the feedback questions. I don't see any more on this particular one.
By the way, the only thing I would add that we really haven't seen a whole lot of analyst opinion, and I haven't. I mean, unless there's notes you guys haven't caught yet, I haven't seen really much of anything sort of praising this deal or big upgraded price targets for either of these names. I do think you're going to see that. Now, people might wait to see the quarters from these two, right? They might wait to see the reports, but just imagine if both these companies report well. Analysts are going to be tripping over themselves upgrading these names and raising price targets now. So that has yet to come. I think that's going to be a pretty big catalyst over the next couple quarters. So that was the only item I would add that we kind of hadn't covered on the Cloudera Hortonworks deal.
Okay, good. I do recall seeing one upgrade on Cloudera. They were upgraded to buy from neutral at D.A. Davidson. So, yeah, boutique shop, I
Okay,
guess.
so there's one I haven't seen it. I haven't caught up on some news. I've been kind of doing my own thing, but okay, there I see it too. Yeah, I don't see a price target on that. I just see a rating change. So, yeah, we'll see what happens. I think it could be pretty interesting. But anyway, the floor is yours, my man.
All right. I do need to get one of these out of the way. We talked about FireEye already, but we have one listener who mentions it many, many times. So why don't we exhaust FireEye here? I talked to so Blue Chip Trader had a trade on, and he liked the momentum of Palo Alto, PANW. Now, that's in his wheelhouse of trades, and we differed how the type of stocks that he likes to trade from a shorter term swing time frame, as opposed to some of the more unfavorable stocks, contradictory stock. I don't know what how do you want to call them? Contrarian stocks that you like.
More value oriented. Well,
right.
By the way, though, I mean, remember, Pandora was in my focus list. I removed it for something else that has done really well, or I think is going to do really well.
Pandora or Palo Alto?
Oh, I'm sorry, Palo Alto. Palo Alto, when it was 135-ish to 145-ish, I put it in my focus list and probably removed it once it hit. I don't know. I'd have to go back and look at my prior posts, my prior focus list posts. I'm just guessing 205, 215. I probably removed it in favor of something else. But no, I mean, hey, Palo Alto is a very good name. That's another one. I mean, it deserves, it garners a nice premium. I would say it deserves most of that premium. It doesn't trade, exorbitantly richly. Like an out year, that's about 7 to 8 times out year. Again, double. It trades double where Hortonworks trades. There's another perfect comp, by the way, to Hortonworks. I mean, Hortonworks, if it just catches up, and Cloudera too, if it just catches up and gets the same valuation as Palo Alto does, it's 100%. Right? It's a double. It doesn't have to do anything different. All it has to do is trade at the exact same valuation as Palo Alto, and you got a double. And but yeah, and I don't think Palo Alto is overvalued. I don't think it's undervalued. I thought it was a screaming buy, like I said, when I put it on my focus list, and what was it now, 80, 90 points cheaper. I really liked it then. And I still like the name, but I just don't think it's. I mean, hey, I can't like it as much at 225 as I did at 135. It's that simple.
Right,
but I think it's a very respectable, very dominant, great company. They have a long runway too. So I don't dislike Palo Alto at all.
I know you don't. It was actually helping me segue into talking about FireEye, because the question was, to Blue Chip, why wouldn't you buy FireEye instead of Palo Alto? The answer to that question was, it doesn't fit his style, where Palo Alto, just the price action that he likes to see, follows that, and it's a shorter time period. Now,
Palo Alto, there's lots of 5 and 10 and 15 point trades.
Sure, and
he's
that's
probably
what
trying to take advantage of.
Exactly. Now, the listener who asks about FireEye quite a bit has noted you've been very bullish on this name in the past, and does this latest move change your mind at all? I would suspect no. It actually probably helps your opinion, because you've been bullish on this one. It's been one of those ones that just hadn't moved for a long time, and you just scratching your head, why isn't it? Now it finally is, so it probably confirms what you're doing, unless I'm mistaken.
No, yeah. I mean, the thing about FireEye, and I think just to quote myself, I said I wasn't adding to this because I wanted to kind of see something. Then I posted that I thought it was a very good buy stop above a certain price, and the buy stop is basically working. It's probably only, what is it, 70? You probably remember this better than I do. I think it's maybe 70 cents above the buy stop, so it hasn't really moved a whole lot, but it's kind of working. Sometimes, there's a great expression by Louise Yamada, and I'm not a huge fan of people who are kind of pure technicians, but her expression is that the longer the base, the greater the space. And hey, I think there's a reason that's a great expression. It holds a lot, right? So a lot of these great axioms, these Wall Street axioms, exist because they are probabilities, and FireEye is just kind of one of these unusual things. If they keep delivering, I was very vocal about this on their last quarter. Like if you lined up their last quarter, and I think I have a note to this effect where you said, look, if you wanted to judge FireEye on like 5 or 10 criteria, and of those criteria, how many of them did they beat? Well, they beat like 90% of the criteria. Well, there was one little thing that I guess people didn't like. So the stock traded on the one thing that people didn't like versus the 9 things that were great. You know what I mean?
Mm-hmm.
And this is why I'm just going to say it. The longer the base, the greater the space. I'm probably going to raise my price target on FireEye here pretty soon. Again, I might have to see the quarter. I'm definitely going to, so I'm going to post a new focus list either late this week or early next week. I'm going to radically increase my price targets of Cloudera and Hortonworks because I think they can trade a much, much higher valuation now. And FireEye, I think I can pretty much do it too because I think that it might just finally be time that they're going to get pin action off of the Lyft and all the other software companies that have benefited where they haven't really benefited. Sometimes we just see this. We just see these oddities where stocks don't really move in any kind of sensical manner. And I always tell people avoid trying to tie a stock's move to logic because stocks don't really move logically. Stocks are the ultimate sort of weighing machine of the collective psychology of human emotion. And human emotion is anything but logical. So stock prices are not going to move in logical manners. They're going to move in very erratic, illogical manners. It's sort of the opposite. Some people believe in market efficiency. The markets are highly inefficient. So I think market efficiency has been debunked 1,000 times over. So if anything, stock markets are highly inefficient and prices vary wildly, and prices can change a huge amount on relatively minute changes in information. So, and I kind of think that's all FireEye might need, is that a minute change in sort of positive information could create a very, very large change in price. So we'll see, But yeah, there's no reason for me to change my view. My current price target is 25 to 30 on FireEye. It probably should be higher. I've always said it's really conservative. But at the same time, look, if the stock's got to get to like 21, what was the price you and I identified on it the last time we talked? There's like some big hang up on it. It was either like 21 or 22 or 19 and a half. There's some big sort of resistance price on FireEye that has just been plaguing this thing forever. Let me see if I can find it. The first one's basically 1950.
Yeah, I was going to say 19.
Yeah, 1950 is pretty much, and then it's got to chew through a bunch of kind of resistance between 20 and 24. So this could be like a lot like Micron. Micron, again, there was no reason the stock ever traded at 10, and then it had a slog and fight and claw, and it was like a really, really huge. It was like pushing a boulder up Mount Everest to get to 20. And then it was a little harder to get to 30. And once Micron was above like 30, 35, it like soared. so it was a really hard slog for like the first 80, 100% move. And then like the next double was a piece of cake. My guess is FireEye might end up kind of being the same. Like the next 40, 50, 60, 80% upside from here is going to be a big battle. And then I don't know. This thing could go from 35 to 55 in a heartbeat. I'm not saying it's going to do that, but I'm just saying that we've seen stocks move like that time and time again. Another great example is Overstock. Overstock just was the most undeserving stock at 13, 14, 15, 16 bucks like ever. And it had to fight and claw and scrape and battle its way to like 25, 27, 30. And then what does Mr. Market do? All of a sudden, it goes up 60 points on really nothing other than Bitcoin going up in value. But that's how stocks move, So we'll see what happens. FireEye has just sort of been battling the massive hatred that's been against the stock because you know why? Because it was super successful post-IPO. So it's almost like it just hurt too many people too quickly, and then it's become a hate trade. And sometimes hate trades take a while to unwind, but when they do, and if they unwind successfully, they don't just go up 20 or 30 or 40%. They go up by multiples.
All right. Well, Overstock's back down, trading at 25. The interest. I'm sorry, 20.
Well, I added that. Yeah, I added that. I'd have to go back and look at my post. I want to say it was high 25s, low 26s, where I got back long that. So I don't love it here. I would probably love it in like the high teens, low 20s, mid teens. But my play in Overstock is real simple. I kind of think, as even though I'm not a Bitcoin trader or a Bitcoin bull like some other people on the side are, and know far more about it than I do, I just kind of think we could have another big Bitcoin run. And even though Overstock really shouldn't trade on the value of Bitcoin, that's what it's done in the past. So if we have a big year-end run in the Bitcoin, or the other thing could see is you could see Bitcoin trade poorly through the end of the year and then have a big Q1, Q2 move. But if Bitcoin has a big move, let's say Bitcoin goes up 35 to 100% from current prices, Overstock will be a huge winner again. And Overstock has plenty of good news. I mean, they have plenty of things that could make the stock go higher. But I'm definitely like it again, and I'm long the name. And I don't know if I'd add to it here. It'd probably have to go lower for me to add to it. I don't know if I'd add much on the way up. This is a name I don't feel I need a big position in, because if I hit it good, like I did the last time, it's going to go up a big percentage. So to me, I kind of view it like a biotech that has like one drug approval for small revenues. So it's not like a Gilead that gets a new approval. It'd be more like like let's say ACAD gets another approval. That's kind of how I view Overstock. It's like the risk of a biotech, but it's not like a biotech with zero revenues. You know what I mean?
Mm-hmm. All right.
But no, Fire. Just to round it out, though. I mean, I don't know. I mean, FireEye, if they probably just need just a bit more growth. If I was thinking about this the other day because I was talking about the stock with somebody else that I do some work with. Maybe they just need a couple more percentage of growth. And I've seen things like that happen too. Or maybe they need to fully get into where they're producing slightly higher amounts of positive EPS. They finally crossed that barrier. They've gone from a negative EPS company to a positive EPS company, but maybe they just need another few cents of EPS. I've seen that too. I've seen that effect where, you have a lot of people, just stocks don't trade well when they're even if the EPS is minorly negative and revenue growth is really good. All of a sudden the stock, by the way, Palo Alto traded that way. Palo Alto traded much better when its revenue growth slowed down, but its EPS got a lot more positive, versus I liked the stock more when it had much higher revenue growth and was way cheaper on valuation, and they still had like sort of flat to negative EPS. That's years ago when the stock was like a $35 to a $45 stock before it had its first like 2-3x move. But a lot of the institutional guys actually ended up liking Palo Alto a lot better once it was sort of doing 8, 12, 15, 16 cents a quarter in positive EPS. So FireEye might kind of follow that same kind of pattern.
All right. Let's see. Let's go through some listener questions. I'm going to start from...
By the way, I have a few that were emailed to me too, but so you fire away, and then what you don't catch, I'll catch.
Okay, fair enough. The first question we got this morning outside of the Cloudera and Hortonworks was about Pivotal, PVTL, and the question is this the time to start a position? Apparently the listener, it was going over some of his older notes, and you had liked this one, and here it is down below 20. Is this a place that...
Well, yeah, I think on our last call, too, we talked, I think I disclosed that I have a small long in this again. I would have a bigger long, another buck and a half lower. But yeah, no, I like this name enough to kind of put a little bit of it on, like a 1/3 position on. I think I bought it right around current prices, give or take 15, 20 cents. So yeah, I like Pivotal. In fact, the one thing I'll say about Pivotal, of all the new IPOs, this is one I think could become a much, much larger company. So I kind of, we all have patterns and we all do things that our mind works in ways that we try to compare things to prior things. I kind of think Pivotal is a lot like a service, how I thought about ServiceNow, like in 2014. Or how I thought of a Workday in 2014. Obviously, both those companies have been much more successful and good calls and picks for me long term. And yeah, I kind of think of the new crop of IPOs is one of my favorite long term. I don't know if it's going to report great. I think, are they past their IPO lockup? They may. I honestly don't know. I have to look at the calendar really precisely. They might have an IPO lockup coming. That might put some pressure on them. I have really no clue if they're going to meet or beat the coming quarter. I mean, they'll have good growth, but could they miss the quarter by a penny or two, or miss the growth rate by 1% or 2%? They could. But I kind of chalk this up as one that I'm probably going to do what I did in some other positions. Splunk would be another name. I always liked Splunk. I always thought Splunk was a very good company. There were times that it was valued, and there were prices that I was a seller of the stock and not a buyer of the stock, but it was always on my radar as a name that I wanted to own at the right price. I kind of put Pivotal in that camp. So of all the new IPOs, I think this could be a big, pretty dominant company that, again, echoes kind of the patterns of the Splunks and the Nows and the and that ServiceNow, NAW, Workday, names like that. There's good pedigree here. This comes out of the same lineage that VMware came out of. Same thing, VMware. I like VMware. So it's the same lineage, same kind of IPO process. Comes out of EMC. Pivotal's basically able to sell to all the EMC and VMware customers and now Dell customers. So there's a lot of advantages to companies like that, but I think they have a good product, and I think this will be a lot bigger company over time. It's already a large company. That would be the only thing I would say is I would probably like Pivotal better if they'd brought an IPO 2 or 3 years earlier, right? Mm-hmm. Because a lot of the growth of the company. I remember when Pivotal was doing 150 million a year as a pre-IPO company. Well, it's the revenue growth is 6 to 7 times that now. But no, I like the name. I have a small long. I might get bigger in it over time. My preferred trade would be, hey, I kind of hope they have a bad report, and if an IPO lockup's coming, I'd rather have it go lower so I could buy a bigger position in.
All right, let's see. Next one. Bear with me 1 second here. I think we talked a lot about these. Keep seeing the same ones over. Okay, here's one on Sina and MTSI. So congratulate you on the HDP work. This listener currently has large positions in Sina and MTSI, so that's Sina, SYNA. Currently down around 20% in both these names. Do you like adding to it at the current levels? So let's throw those on the chart.
I have added to MTSI around current prices somewhat recently. Maybe it was a little bit below here. Within weeks, I've added to this name. I don't know if I haven't added the Sina recently, but I did buy into that big gap down. God, that was like weeks ago. Was it months ago now? And I might have even traded out of part of that. But put it this way, Sina's. That's another weird one. So this is, again, sometimes stocks just trade weird, oddly. If I recall, I don't think anybody really found anything they didn't like the last earnings report from these guys, and yet I think it's kind of traded down with the SOX. It's kind of traded down when Avago was going down and went down. Okay, then we had a report that some people were kind of negative on like Skyworks and some of the Apple suppliers. So it's almost like Sina kind of goes down with like the bad news of other people, even though they're not necessarily connected to it. other people being other semiconductor companies. People's not a good comparison there. So it kind of goes down with the bad news of other semiconductor companies. This is sort of that effect I talk about a lot that I actually like to take advantage of. This algorithmic effect that we have now where stocks don't tend to hold a value. They tend to, all things being equal, they tend to trade lower. Until they have a material positive catalyst, and then they put in the huge upside move, and so I don't know. I some of these things again, we don't want to overthink the rationality of it. I think it's irrational, so we have to, I guess, either wait for a rationality return or a positive catalyst. But there's really a lot of reasons to like Sina. I mean, the last merger M&A deal they did, I think, was really smart. I think they've had roughly 2 pretty good earnings reports in a row. Internet of Things is probably going to become a big theme again in the semiconductor space goes in phases. So there, in the market cannot kind of typically only handle like 1 or 2 themes at a time. So there was a time when IoT, Internet of Things, was a big theme in semiconductors, and of course, guess what? All the IoT names did really well. So that was like the last time Sina was like an $85, $90 stock, and it was not a super expensive stock at $85, but it was the last time Sina was sort of at highs, and then what replaced? So I guess big data or AI replaced the IoT theme. And so that's been a huge reason why NVIDIA and AMD have traded so well, and a lot of other semiconductor companies haven't benefited from that. There was a time when Apple was the big theme for semiconductors. So, my guess is the AI theme is probably getting pretty long in the tooth now. We're probably close to another theme. I think 5G is going to be one of the next big themes for semis. That's already had a positive impact of Qualcomm, or to Qualcomm and some other names. And I kind of think we're going to see a resurgence of IoT in sort of the connected internet that is not the internet. So Internet of Things, connected devices, connected cars, transmission from one thing to another thing. Again, that's all IoT. So my guess, I don't know that IoT is going to be the theme that becomes the next big semiconductor theme, but I think it could be. I think 5G definitely will be. And usually when 5G is sort of in action, IoT is also in action because the themes kind of work together. So we'll see. But there's not really a reason for Sina to really be acting negatively, other than the persistence of algorithmic trading activity, which in the absence of anything else, it forces stocks lower generally. So we don't have an uptick rule, and stocks just don't trade flat now. So they're either going up or going down. They spend more time going down. And then when they go up on the positive catalyst, they go up in these great big bursts. So, 42 is pretty attractive. I mean, I don't know. I mean, I never try to be too preset in what I will buy. But 42 is it's definitely inside the buy range for me for an add. I don't know if I will add to Sina because it's dependent on how I feel about other names. But it's certainly at a price I could add to the position. I've got a decent stake in this. I'm pretty fine. I got a huge price target on it. Huge meaning, I mean, it's literally like I think my price target projects to something like 130% higher than the current price. So I'm just gonna stick where I am. But I think Sina, Qualcomm, Swerve, that's SWIR. I think those are big winners, and I think they could trade well even if the SOX index doesn't act great. So we'll see what happens. But yeah, I like the name. And as far as MTSI, like I say, added to it. I think the fiber optics. It's a fiber optics name. And I've said this time and time again, but I think the fiber optics group had a hard turn in fundamentals, and I think the fundamental bottom was in Q4, Q1, and frankly, the stocks really haven't acted very well given the news. I mean, they all reported good. They had good spikes off their reports, and for the most part, most of them have kind of given up their post-earnings spikes. So again, I think they're attractive, and and they just had the first good quarter in what should be a string of good quarters. And fiber optics generally kind of tailwind off of 5G as well. But we all know what's plaguing some of these stocks, and it's trade fears with China. So again, that just creates more valuation discrepancy or room, if you will. I'm certainly not going to sell any fiber optic stocks due to fears in China, because these stocks have literally sold off 50 or 75 or 100 times on the same news. So I'm not really going to worry about the news that's been regurgitated 100 times on this space.
All right, and since we got one that just came in, the question here is, would it make sense to take profits in HDP and put it into Sina? And he says, let's see.
Well, I wouldn't.
Okay, go ahead.
Let's say, not to cut you off, but normally, I would. So normally on an M&A deal, especially if the M&A deal sort of fully valued the company, like Mule, okay? Or if it was just going to get taken out and there was going to be no real. But in other words, could I have kept Mule and ended up with CRM? I could have, but I don't want to own CRM. But in this case, I actually think the combined entity of, as I said earlier, the combined entity of Cloudera and Hortonworks could have a huge amount of upside, and the upside could be similar to the upside in Sina. So I typically don't like doing. I'm not going to swap one name for another name. I'd rather just own both. So I mean, hey, if Hortonworks was up 50 or 60 or 80%, yeah, maybe I would pair off a little bit and go after Sina. But here's the other thing. You've seen me do it. Sometimes I just do things when I kind of feel like, there's nothing in me that's telling me I need to buy Sina right now. So, I have systems, I have a lot of data, I look at a lot. Fundamentally, I like it, but I probably don't like the chart. To me, it kind of looks like it's going to go down more before it's going to turn and go up. So I guess I'd rather see different technical action in Sina, which could come at any time, but we haven't seen it yet. So until I see a different technical setup, my view is, hey, let the machines take Sina as low as they want to take it, and either buy it at a lower price or buy it on the curl higher. It doesn't really feel to me like a stock that's sort of there's any indication that it's hitting a price that it's not going to go any lower. But as far as, I don't know, I honestly don't think I would sell this combined Cloudera Hortonworks. I kind of like as much as anything right now. So I don't think I would swap that into anything else. I want to keep that. I want to either maintain or increase my net Cloudera Hortonworks position.
All right, so scrolling through some other ones, we've touched on FireEye. I think we're almost
here would be a better example, by the way, as you're just keep looking. But let's say Qualcomm's 85 or 82. That might be a swap I might do. And if you think that the reason is, okay, for one thing, I'm swapping semiconductor to semiconductor. Here would be, so let's say AMBA. Let's say AMBA gets bought out. So and by the way, that's something that could happen. If I had a short list of, hey, next buyouts, AMBA would probably be on that list. And so let's say AMBA were to get bought out. I'd definitely swap AMBA into Sina. Because I'm swapping a semi to a semi. I'd be swapping a stock that got bought out, and assuming it's a buyout that kind of fully values it. Another one, let's say a SWR, SWI, or let's say SWR gets bought out. That would be an example of a swap I might do. Again, kind of swapping like assets to like assets. So I'm less likely to swap a software name into a semiconductor name, if that makes sense.
Yep, it does to me. Let's see.
Yeah.
So let's talk Nutanix, NTNX. I think the question was worded wrong here because it says, what do you think of Nutanix? It's bouncing on the heels of NTNX. So I'm guessing that is worded incorrectly.
Yeah, I
on
think
that
they
one,
mean it's bouncing on the Hortonworks stuff we're talking about.
Probably.
Yeah, no. By the way, hey, I was sort of like, okay, this was one of my huge winners of either this year or late last year. I really like this name, and yeah, last year actually, it's a big winner for 2017, partially this year. But I had pretty much gone bearish on this. So I'd gone full bull, kind of neutral, then almost bearish. I don't think I ever shorted this, or if I did, it wasn't very long. I think I thought it was a good short. I probably should have shorted it at 60 and 60 plus. Now I'm kind of neutral to getting slightly bullish on it. This was just extremely undervalued stock in the 15 to 20 range. I think kind of fair value certainly is around here. This is another one that, I mean, basically, even at the current price, it probably trades at a discount to quite a few peers. This is a pretty strong grower. And in fact, I'm looking right now. They don't trade it near the discount of like Cloudera and Hortonworks do, but they definitely trade a discount to companies that have similar to or lower growth than they do. So I wouldn't say I'm like back in like a full bull camp on this one, but I wouldn't short it here. And I mean, traders, watch the chart. I think traders that like to trade short term. This thing could start being kind of a bounce trade from here, and it's interesting again. I mean, this could be a much bigger company in the future too. They get a pretty good runway. There was some worry. It was fun. It's funny. There were some worries about competition when it was an $18 to a $15 stock, which was total bunk. That was just the people trying to find a narrative for a stock price that didn't make any sense. So people always try to put news narratives on stocks to explain the move. That's inexplicable. And honestly, though, I kind of think the drop, call it a 20-point drop from highs, actually I think is kind of justified, because I think just like Twilio, I think Twilio is massively ahead of itself. I think Nutanix got ahead of itself at in the mid to high 60s. So I didn't think the price was sustainable there. Again, probably should have had a small short on, would have made money. And I probably would have covered it around here. I probably would have made 15, 20 points on the short, covered it, and somewhere like say, I'm neutral to bullish on the name. But again, I like Cloudera Hortonworks combo way more than I like Nutanix. I like Twitter more than I like Nutanix. I like Qualcomm more than I like Nutanix. So there's plenty of names I like more than Nutanix. For me to get like really bullish, I either got to see evidence that so either the price has got to stay where it is with some really good news. So let's say there's really good news that doesn't get embedded higher. I would like Nutanix more, or if they just keep taking it lower. My guess is my chart read on it is that I've seen these kind of charts a lot. I think this resolves lower versus higher. They've had a gap lower. They don't really have a lot of support until about 38. A really attractive price would probably be 29 to 30. So I don't know. I mean, stocks just move crazily now. And, if they have any whiff of bad news, or if that quarter doesn't come in really nicely, they could kind of shock drop this thing another like 25%. And somewhere between 30 and 38, I think this is highly attractive.
All right.
I'm not saying it's going to go there. I'm just saying that's where a price level where I would be much more interested in buying it.
Okay. Let me get this one out there. So this isn't a question. Scalp Trader is shorting MDB with a half-size position, and he's going to risk 1 point on that one. So Scalp Trader shorting MDB with a half-size position, risking 1 point. Go ahead. Well,
there's one of those egregiously overvalued cloud software names right there. By the way, the comparison to MDB is pretty funny. So I'll just leave that at that. But on out-year numbers, MDB is 13 times sales. Again, Hortonworks is 4.7 times sales on out-year. Roughly similar. MDB has slightly higher growth, but not way higher growth than Hortonworks. So there you go. I mean, so you can do your own math on that. That's a huge discount. 13 times out-year versus 4.7 times. There you go. Another reason I like Hortonworks Cloudera is the insane valuation of MDB. I think his short looks pretty good.
Okay, and he's very short term. He's probably the shortest term of all of them. Hence the name scalp trader, right?
Sure.
All right, so we did have a question come in, and there's no way we can address it today. Let me see. Hold on one second here. I lost it. It was a question.
By the way, while you're looking, I think you've gotten or covered most of the things. And by the way, I will repost some of these in the next note, either this afternoon or tomorrow, if people weren't listening. But I think you've kind of covered all the ones. I was just looking through my list to see if there's anything that I needed to answer, and I think you've covered them.
Yeah, let me see. There was one in particular, and I'm having trouble finding it. It was regarding the fundamentals. This is one that I know you won't be able to cover, especially on short notice. And for one time, you actually have a time crunch today, so I'll throw.
I have to go in like 5 to 10 minutes.
Yeah.
At the maximum. I can stay on a few more minutes, but yeah, 5 to 10 minutes is a hard cutoff for me.
Sure, no problem. I want to just throw it out to you so that you can prep it, and so the listener doesn't think that I'm just ignoring him. In this case, could you share with the listeners what your forward-looking financial metrics that you look at and that you focus on with many of these companies that have train wreck financials by conventional analysis? Perhaps you can look at some of those in a future call, especially
on which one though? Which space or which?
The stocks that you look at, really. I guess your coverage, your overall coverage. What are some of the key ones that you're looking at? There weren't any particular names mentioned in this one, and that's why I said.
Yeah, I mean we've talked about that a lot. I mean, I can answer that in a very small subset. I definitely weight and view sales as more important than earnings. I think one of the most overused and over talked about metric is PEs. Mm-hmm. PEs are like literally close to meaningless in tech. Now people don't think that. They all look at the PE of Apple, look at the PE of Facebook, and look at the PE of Google. And okay, so when a company gets very large and is a stodgy, slow-growing company, PEs sort of tend to matter, but they still don't matter that much. I mean, one metric that actually would have a lot of validity would be sort of like a PE that is adjusted for net cash. By the way, it's one of the metrics I do. So, for example, when I was buying Apple in 2013, it had literally like one of the lowest adjusted PE ratios adjusted for net cash, period. By the way, Qualcomm at $51 to use the exact same metric hit almost the number to the penny that the PE adjusted ratio for net cash Apple was trading at. Now, here's the problem though. Those ratios look all fancy. They tend to kind of work long term. They don't give you an edge in timing. So I would say when I hit them because I'm timing them off other things, not those ratios. The ratios just sort of help me increase conviction or decrease conviction in something. But I would basically say PEs are the most overused and least important things in technology. Things like revenues are much more important. Out-year revenues are much more important. And things the things like that people don't. What did Warren Buffett always preach? Cash flow, free cash flow, discounted cash flow over time. Hey, that's kind of a lost art. I mean, in my mind, that's like probably the most important metric is cash flow. And I almost never hear the media talk about cash flow. And that's probably the one I tend to focus on the most. Anyway, that's about it. In the shortest way I can answer it, that's probably the shortest way I can answer it.
All right, and then I will get you out on this last one. We've got the NASDAQ down a lot today, almost 2%. Triple Qs are down. So what's your overall take on the NASDAQ market as a whole?
Honestly, I've had a hard time I still think we could have a flash correction. I think we could have a much better year-end rally if we have some sort of a correction before the year end. So if we were to have a correction next 3, 4, 5, 6 weeks, I think we have a much stronger year-end flourish. Honestly, it's just been weird. My sentiment readings have all been mixed. Like there hasn't been a real clear sentiment overshoot or undershoot for many, really since the spring. Likewise, there hasn't really been, we haven't had a big move in the indices. It's kind of been this weird plodding persistence of trend, sort of sideways, slightly upward bias move. I don't know. There's sometimes I can give a more clear answer. Other times it's sort of like it's more esoteric. Here's the one thing I would say that I do have good hard data on. We finally are in a phase that I've talked about. So we've kind of been in another stealth correction phase. My sentiment numbers have been going lower. Percent of stocks below 50-day, 150, 200-day moving averages. So, like, for example, the percent of stocks on the NASDAQ that are above or below the 50-day. So like if 80 or 85% of all the NASDAQ stocks are above the 50-day, that's a lot of times that's like a short-term kind of top signal. Likewise, if you get a big harsh short-term correction, I mean, I've seen this number actually as low as like 6%. But when you only have like 20% of the whole NASDAQ above the 50-day moving average, that's usually a good. It means you got a pretty good washout. The other day we hit like 39% of all the NASDAQ was above the 50-day. That's kind of the lowest we've seen in months. It's not in and of itself, it's not a spectacular number, or it's not a real indicative number, but relative to where the indices are, it kind of shows you that, hey, there's actually a lot of stocks that have gone down or have kind of underperformed relative to the indices. So it points to this continuing really narrowness in the market. And at some point, that's going to have to rectify itself. You can't have a market that just keeps going up and up and up and up on 3 or 4 or 5 stocks. That's not going to continue in perpetuity. So at some point, either you get a really big catch-up phase where tons and tons of stocks have pin action and go up a huge amount because they haven't participated, or the few names that have been the ones that have driven the ever higher indices end up cracking hard. Now, usually they take everything with them for a while, but that's when you finally, you get the crack. Maybe the FANG. I mean, a few stocks have done it. I mean, Facebook is down like 70, 75 points from highs. That's not meaningless, but it's kind of been a solo journey. Same with Tesla. Tesla's had a big crack, but it hasn't really taken anything down with pin action. So again, it's like one of the strangest markets of all time. So we kind of are there. But so the only notable thing I would say about the markets is that we have had this kind of stealth correction. A lot of stocks have gone lower. It is sort of notable that the other day we had like 38% above of all NASDAQ stocks were above the 50-day, which is a pretty low number given that the indices are kind of around all-time highs. So we'll see. I mean, my guess is, either that's setting up for a lot of stocks are going to play catch-up, or we might finally get a correction in some of the high flyers. Either way, I think a lot of the stocks I focus on will end up doing better on a relative basis. So, and that's kind of what I've been doing for like the better part of half a year. I've kind of been playing like what I call safe ball. What they call that small ball in baseball, where you're not trying to hit a bunch of home runs, but you're trying to just keep guys on base and keep advancing guys on base. And you kind of win a war of attrition. I mean, that's kind of how I've been positioning myself for about a half a year. Like, I just want, the only stuff I really want to buy are things I feel have a lot of value or a lot of safety in case something bad happens. So, I don't know. I mean, it's kind of the same view, but this is probably the most interesting sort of technical, I guess you call this a divergence, that I've seen since like April. In April, we kind of saw the same thing. We did get a smidge of a market correction, But in April, we hit only 27% of all the stocks in NASDAQ were above the 50-day. So that was the second lowest reading of the year. That was a pretty good time to buy stocks, by the way. So, I'm kind of hoping maybe we get kind of a reading like that. But yeah, I mean, it's still, at some point we're just going to have to take the pain. I mean, there's just no, but hey, the pain might, I mean, people said, hey, at some point we're going to have to take the pain in mid-2019 or mid-1998. Well, they had to wait 18 months to 2 years before everybody took the pain. And some of those people made a lot of money before they took the pain. So honestly, I don't know. This is a very strange market.
All right. Well, I think that's as good a place as any to hit the pause button for today, and we can reconvene next week. Should we get any new updates or questions from our traders, from our listeners, we'll forward them over to you, and then maybe you can post some interesting or compelling ideas or any new updates to the page. Sound good?
Hey, sounds great.
All right. Hey, thank you so much for spending some time with us today and getting your thoughts out there. I'm sure listeners greatly appreciate it. I know I do, so thank you so much.
You bet. Viva la Cloudera, viva la Hortonworks.
There you go.
That's how I'll end.
All right. Great. Mic drop. All right.
Later.
Bye-bye.
Okay. Bye.
Hi, Blue Chip here. Just going out there with that Facebook short right here in the mid 158 area as it breaks down to fresh multi-month lows below this recent September-October support. It has potential to really kind of, typical corrective activity in the market, things tend to extend to the downside a little further than most people would imagine. And I think this has been a weak stock for quite a while now. Ever since that gap down in late July, trending below the 200-day, 50-day moving, 20-day moving averages. I think it could definitely go into like a free fall mode here, and maybe get down to those year-to-date lows around 150-ish at this point in time. It's been showing up on the TA page scans as a swing short over the course of the last couple sessions. And here it is, just kind of coming to fruition. I know I'm probably a little late to the game here, but you know what? The burden of proof is on buyers at this stage. Obviously, if price action was to reverse and get back above this morning's highs around that 161, 162 area, well, then that's going to be a sign of confirmation that buyers are defending weakness and trying to lift prices higher. I don't see that happening today. Maybe tomorrow or next week, but I don't see it happening today. Again, the burden of proof is on the shoulders of buyers at this point in time. So throwing out a short there in Facebook FB. Hopefully we can carry it for a swing, maybe take a partial profit in today if things get a little hairy. But yeah, we'll see how that plays out here. Overall, taking a look at the broader market activity. Advanced decline line, probably one of the most aggressive distribution readings I have seen, and I got to go back and look because I can't recall the last time I saw the advanced decline line in the exchanges as low as it is right now. It was in trend day down mode early this morning, and it's just getting way more aggressive. There is that fear that it's getting towards an extreme, but as I always state, when you get extreme readings, the burden is on the other side to step up and take advantage of the extreme move and to reverse it. So until that happens, you continuously go with that extreme reading until the signs become evident that it's turning. And even then, just the turn can also take a while. So I'm showing the last time we had a reading this low was back in August 15th. On the advanced decline line. So if I just take a quick look at the S&P and the price action of what happened on August 15th, yeah, that was mid-month, and price had actually been in the midst of about a 4 to 5 day pullback when the market got that distribution reading there on the AD line. It looks like overall on August 15th, price was down about 1.4%, which gave it that extreme reading intraday after that recent slide. Right now, the S&P is only down 1%. So there's still potential to sink lower. Got to take a little bit of caution here too with the fact that the S&P on a weekly time frame, again, that's a weekly time frame, that's an outside bar that we have going on here. This is an outside weekly engulfing pattern. So that's definitely a concern. We had an inside week last week, and here we are this week with an outside reversal bar in the S&P index as we take out last week's lows right around that 29, I said 2903 earlier, 2900 level. Looks like none of the support levels are really holding up. That's going to basically bring into play the 50-day moving averages for the S&P, which sits below around 2876, give or take. 2870. Let's go with 2875. That's like right between the simple and the exponential. And that's, let's see, that's about less than 0.5% away, which I wouldn't really say is shouldn't be a far stretch for that to get down there another 0.5% or so. Again, I don't know if it's going to happen today, but it definitely looks like there's a lot of distribution going on here in the markets. Up-down volume ratio in the exchanges, obviously, those got real aggressive after the first 30 minutes when those opening ranges were broken in the major indices, and they've just been trending down here throughout the session. So the burden of proof overall definitely lies on the shoulders of buyers. Let's take a look at some of the heavyweights. Amazon really didn't even hesitate with the challenge of those 50-day moving averages. I mean, basically, I mean, it tried to bounce back for what, 5 minutes off the that zone between 920 and 913 on that first test, and then it just pretty much rolled over within about 15-20 minutes later. So that's not by any means any sort of support level there. So anybody that initially responded to that, they're obviously going to take it to the cleaners here as price sinks towards the 1900 level. In that regard too, you got to be careful, because the probe of 1900 might trigger some stop orders, and then maybe that's going to be where the bounce generates, maybe not, who knows. So far, again, burden of proof is on buyers at this stage. Elsewhere, obviously, semiconductors taking it on the chin here today. The news out of China about those probes, not the probes, the hacking chips that were possibly in all these companies who bought servers from that were manufactured in China. All these big name companies potentially having their security compromised, so that's obviously taken a big toll on today's market. The only thing I have to say about that is that the news just hit the tape, of that. That seems to be today's headline. But again, this, from what I've heard, this has been in motion for a while. So as always, most of the headlines you see are already known by a majority of people, or assumed by a majority of people. So don't always think that the headline. There's very little surprises in the market that come about. This could just be a reason to sell overall, just based upon the overall market activity. It's just a catalyst. But it seems like overall that the hacking chips, this has been under investigation for a while. It doesn't really seem to be anything new from those who are on the inside. It seems to be more in the public's eye now. Take a look at Apple. Apple recently made new highs. I would say Apple's actually holding up pretty well here, given the fact that it had that strong run up lately. It doesn't seem like there's a lot of people who are quick to sell that stock. If you're looking